All right. Okay. YouTube, what's good, man? I'm back with another one. It's your boy D Payne. And let's break down this chart. All right. Let's break down this chart that we caught in my Discord this morning. We caught 499% on Microsoft. And I believe I had 380 calls on Microsoft. And it was a great trade. So we're gonna break this down on what I was seeing. This morning we gapped up on Microsoft, and I guess we can kind of, pretty much thank Meta for it too, because like Meta and Microsoft, those two in particular, have been kind of following each other. Especially like they've been selling like pretty bad. So that was on a nice dip. So I knew they was kind of due for a bounce at some point. So with Meta, with the news breaking this morning about them with their I guess their cloud space, whatever that they're trying to create. Not 100% sure on like the actual news, but all I saw was like they popped pretty hard, and I knew Microsoft had been mirroring them lately. So I charted out Microsoft, and I was like, we should catch a dope trade on this. All right. And then we caught 248% on SPY calls as well. And my strike price was like 745. Yeah, I had 745 calls on SPY as well. So great day for our group, SPX Blueprint. We went crazy. So let's break down Microsoft first. All right, so off the rip, I always mark my pre-market high, my pre-market low. So the pre-market low we had 374, and I like to watch four different time frames at the same time. So usually I got like four screens up, but I'm gonna flip through back and forth on the different time frames and show you what I was looking at and why I was so confident to get in calls. All right, so first thing I noticed that we had the first 5 minute candle was red, so I always like to mark the high and the low. And so I use the strat to know my levels, like to enter on the daily, the 4 hour, and the hour, because I'm day trading, right? So I like to already have them marked up before the market even opens. So I had noticed that we was gapping up above the call entry on the daily, which was at 374 and 15 cents. We pushed down. I wanted to get it calls close to the pre-market lows. I had a little box drawn out, and it hit that box. And so once I saw, this 5 minute candle start to wick up, I was able to see it a lot better on the 10 minute chart. So first thing I always do every day with all my charts, I mark the high and the low of the first 5 minute candle, because I track the 5 minute RB and the 15 minute RB. And all that means is an open range breakout. So let me clone this. All right. I didn't have to mark the 15 minute range because the first 5 minute candles was in the same area. And then we started to break down, and I was wanting Microsoft to actually push down off into this, this support and try to fill some of this gap and then push back to the upside. And so I always use the MACD as well. I use the 9 EMA and the 20 EMA. Let's go to the 10 minute time frame. So I always play fail twos. That's like what I love to play the most. Once I saw that we was rejecting right here, we had a fail two up on this first 5 minute candle from yesterday's close. But on this first 5 minute candle of today, we had a fail two up, meaning this candle was red. And so we started to push down. So if I turn off the strat indicator, I use the strat assistant. So if you can see that the first two 10 minute candles was red, and that third one right at 30 minutes was green. And so I was very patient. So when I say fell two down, meaning at one point this candle was red and then it fell to stay red. All right. And it ended up turning green. So I was telling the group, I was like, hey, if we break above this, then I'll definitely, get in on calls, but we got to break above this 10 minute candle to go higher. As you can see, we broke right here. And so on the 15 minute time frame, we got there too as well. So if you go to the 15 minute time frame, it was at the same level, literally the same level as the 10 minute. So if I click back on the 10 minute time frame, you can see it's the same low as well. So my stop loss was right here. So there's a couple of things I like to do for stop loss. Once I see anywhere from 50 to like 90% or 75% of this candle to get retraced, I can choose. That's what I pretty much choose to stop out. But if I'm feeling like really good and I'm like, okay, I'm really confident and I want to give this some breathing room, especially in the morning because there's a lot of volatility in the market, right? My stop loss is at the bottom of this candle, right? So this fell to right here, the stop loss will be at 374.92. As you can see, we never came or took that low out. So my entry, I always like to wait at least 85% of the time for this actual actionable signal to be triggered. So I like to see the fell twos happen, fell two down or fell two up. They just run opposite of each other. So fell two down is bullish and then fell two up is bearish. Like I said, my entry was as soon as we broke that 378.52, I was in calls. So I alerted the 380 calls, and the reason why I did that is because I knew that I wanted to get at least to the pre-market high. So I knew we would be in the money, and I knew that was close to the top of the 5-minute ORB. On the strat, I already had my price target, my daily price target right here at 380, and then we had a fair value gap close on the daily as well at 381. So I had different targets along the way, and so we were scaling out along the way. So I bought a good amount of contracts, and once we start to break above here, we were in calls. And as you can see, we literally had we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 10-minute candles in a row. And I pretty much sold like at the top, and I was done for the day. Like I said, I had runners, and it was like I said, I scaled out like I think right here at 380. Then I scaled out right here at the top of this 5-minute ORB. I scaled out again at the pre-market highs, and I scaled out again up here at the ATR. And I always use the ADR indicator too. Right here, you see it says ADR. That was my initial target. That was what I wanted. And so we hit that target, and I was out of there. And then we pushed again, you know what I mean? But I was already out by that time. So it didn't take long at all. Let's bring in the EMA as well. Let's look at the 15-minute time frame too as well. So like I said, the entry was right here. The stop was down here. And that's a wide stop for some people. So depending on how you want to trade, you can move your stop up as we get in profit. But once we triggered that and went to the upside right here, like it was gone. So let me delete this, delete that. Okay. But I want to walk you through what I was thinking with the EMAs. So I like to tie it all together. Once we, got above this 15-minute time frame and a 10-minute time frame, when we close above that VWAP from selling off, and you got to see that long wick at the bottom, that's what I love to see. If I'm in calls, I want to see a long wick at the bottom, and I want to see a reclaim of the VWAP, which is the volume weighted average price. And then I like to bring in the EMAs. As long as we're above that 9 with strength like that, a lot of strength, it's very bullish. It wasn't even hugging the 9 EMAs. You can see it. We didn't even get an EMA touch of the 9 until 245. That's how long it took for it to hit the 9 EMA. So when you see that, you already know to be bullish. There's no need to be bearish. Like I used to get caught up on the same trade. Like, let me tell you something. Let me turn these EMAs off. I used to always be like, oh, I'm about to short because I want to try to get the whole gap closed. And you can, but sometimes like that's not a big enough gap for me to try to short. You got to think all of this area right here, this whole area, all of these candles are support. We gapped up here, but all of these candles are support. So I already knew once they came back off into this and then they bought all the way back up, we didn't even touch the very bottom of the pre-market low. But I had a box drawn out. I just deleted it so my charts can be clean for this video. But once we pushed up off of that, I already knew to get in. And let's go to SPY. I'm looking to see if price action is going to break above that 5-minute candle or below that 5-minute candle. So when we push down like this, we gap down and we push down. I was like, I want to see if they're going to hold support at this pre-market low. and we blew through the pre-market low, but once we reclaimed up above it. So what I like to see, okay, when we lose the pre-market lows, I want to see a breakdown and then a retest. Well, when we retested, we reclaimed and got back above this. So let's go to the 10-minute time frame. You can see we closed like right here, and then the next candle we pushed up. Let's go back to the 5. So the whole reason why I even got in is because the 5-minute time frame, we had a fail to down. As you can see, we pushed down, and then boom, we got back up here with a fail to down. Now, I actually waited. Let me tell you why I waited. I was explaining to my group, I said, hey, we got a fail to down on the 5, but I want to see if they're going to actually show me that it's real by it getting back above the pre-market low. So this is another thing that I like to incorporate and understand. Like when we lose the pre-market low and when we start to like push back up into this, like we never really broke down on this this 5-minute ORB. Like I like to see actual like 1 or 2 candle close, 1 or 2 5-minute candles close below that, and we didn't. Like we pushed off of this. So there's another thing I was like, okay, then I think they're gonna start to find support. Because I used to always try to short these too. Well, they already did it. Like they already gapped it down and they pushed it down in the first 5 minutes. And now what you want to look for is support. And that's what we did. So we triggered it, this call entry right here. I'll make this line green, and then my stop loss, I'll turn this white right here at the bottom. So let's open this up just a little bit more. Okay, so this is a fail to down. Now understand, I'm looking for it to happen on the 5-minute, the 10-minute, or the 15-minute, whichever one I want to see it happen on one of the time frames. If it happened on more than one time frame, then it even better. So I'm always, every day I look for the 5-minute time frame for that fail to happen, the 10-minute time frame, the 15-minute, and the 1-hour time frame. So if I get one is enough for me to see it, and then I try to wait if it's just one of them, right? If it's just one, I'll wait. Let's check the 10-minute. The 10-minute, we had, we only had an inside candle. It was a 1 candle. I don't really play those. The 15-minute time frame, we blasted up through here. That's just a big green candle. So if you know what you're looking at, you already know you want to enter at the top. So let me go ahead, and this is the candle right here, y'all. This is a fail to down, meaning at one point it was red and then it flipped back green when it closed. So if I turn off the strat indicator, see that candle is green. All of these candles are green. Just look how all these candles is green on the 5-minute. It was so long before we got an actual red candle. All right. So let me turn that strat assistant back on. When we triggered it, it came back in. And so this candle right here, you see this candle was all the way down here. And what I was looking for, I said my stop loss, I said, okay, I'm not going to enter yet. But let's say if we did enter right here on the first trigger, usually I do. But I waited just because I was like, there was a lot of selling pressure, and sometimes they can negate this and take this low out. So I was looking to see if they was going to take the low of this candle out, which is at 742.37, this white line right here, but they never did. But what I said was we're going to get in calls if they get back above this green line and re-trigger it. And once we did that, I got us into calls. So I called, what strike price was that I called? Yeah, I had 745 calls, and I did that because I was just like, my main target was to get back to the pre-market highs, right? So I was like, okay, once we reclaim the pre-market lows, I was like, okay, we should, get back above there and start to push higher. But the reason why I didn't enter, the number one reason why I didn't enter or out the rip is because we were below the pre-market low, and we rejected that. So when we triggered it right here, this call entry on a fail to down, we triggered it, we rejected immediately. That's why I waited, because I was like, I kind of felt like we lost the pre-market low. So I like to see if it's going to break and retest and start to break back down, or if it's going to reclaim. Once we did that, we reclaimed. I brought in the VWAP. I was using the VWAP as well for extra confluence. I was like, if we reclaim right here on this 945 candle on the 5-minute time frame, I was like, I'm going to get us in calls. Well, we did. We got it back above that, and we got back above this pre-market lows. I entered us in the calls right here. We came back, supported, and then we took off. We made a good percentage. Yeah, we made 248% on spot calls, and it was beautiful. So I sold contracts along the way. I scale out. So I always tell everybody, like, hey, I start to scale out at 20 to 30%, 40 to 50%, 70 to 80%, 90 to 100%. And then after that, it was just in runners. I mean, for me, I don't like to play them unless they trigger. So 85% of the time, I like to wait until they actually trigger. So they did that. They broke it, popped up, and then pushed all the way back down. And you had literally 1, 2, 3, 4, 5 red candles right after that. So this was the high, and then they sold up pretty much all of them off. So, but it all started with the 10-minute time frame. The 10-minute gave you a fill two up. That was the last push, and it gave a fill two up on the 15-minute and a 1 hour. On the 5-minute, it just gave like a regular, a regular little two up. And so that's what I saw. And I mean, but the entry was based off the 5-minute time frame on this one. And so if you get multiple, because like I said, the fill two is my favorite, and you want to catch them at like significant areas of support and resistance, right? So if the market sells off really, really hard, then I know that once it hits the bottom, like this did, so this drop off was pretty hard. Sold off hard, and I like to see if it's going to bounce, and that's what we did. And then boom, easy breezy. I always tell my people in the group, like, hey, I don't like to trade after the first hour and a half, 2 hours max, because after that, you're going to experience chop most of the time. And I'm not talking about just random news, random pops in the middle of the day. So when you're fighting with the market, they like to automate that a lot of times in the middle of the day. You know what I mean? So other than that, it was a great day for, our group. You know what I mean? Like I said, if you're looking to join the community, please click that link in the bio. Please like this video, share it, share it with some people that you know that's into trading. Subscribe if you will. I'm about to start to post a lot more of these videos, and I'm super excited for the future because my biggest thing is I just want to help people understand these charts. I've been trading now pretty much since like 2021, really like 2020. I started to get back into it like the end of 2020, like middle or end of 2020. But when I actually took it serious, it's like the top of 2021. Like I was like, I'm gonna learn this. I don't care how long it take. I took so many like losses and wins trying to figure this thing out, and it took me a while. But now, like I said, I got the experience, and it's been paying off like big time. I'm just now starting to reveal to the world like what I've been up to, what I've been doing. Like I said, I still got my other business. I'm still doing that, and I'm still just working on growing this business now. And trading has been such a great addition to what I've been doing. And like I said, it teaches you how to learn who you are. You know what I mean? Because it's gonna test you in every way. It is very important that you learn technicals as soon as possible. And in this group, like I said, we doing it like I'm literally teaching live while we're in the trade, like why I'm in the trade and why I'm like exiting the trade. So if we lose a trade, I want to show them how, like, this is how you actually take a good loss. So there's a such thing as a good loss and a bad loss. And so meaning like you cut your losers, be quick to cut your losers. Like a bad loser, you got to know and read the price action, knowing like, hey, this is going against you. You might want to get out instead of just taking a really bad loss, and then showing them how to like actually have good winners and targeting different, targets along the way, meaning like, having those big runners, learning how to hold your runners a lot longer and knowing what levels to look for. You know what I mean? So the strat definitely helped me out with that. When I got introduced to the strat, like my whole trading journey just changed. Like I knew a lot of different stuff, gaps, head and shoulders, bull and bear flags. I still use a lot of that stuff, but the strat really gave me the foundation on like seeing a true reversal. this video, I had to get this video done. That's another thing. Got to get used to posting a lot, saying, it would put myself out there and just, letting y'all know that, hey, y'all got help over here if y'all want to come join this community. So SPX Blueprint is the name of the community. And like I said, I'm more than happy to have y'all over there. Other than that, if y'all just want to watch the YouTube content, that's cool too. Don't even matter, because, we're going to keep doing our thing. Other than that, man, I'll see y'all on the next video. See you on the next trade. Peace.